Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Welcome, Art Jarvis. Welcome, listeners. Taking Stock, episode 49.
How about that? Time flies.
Yeah, you know what?
Period.
That puts us, we're like 3 episodes away from 2 full years.
Yeah.
So the 2-year anniversary of, the bi-weekly podcast, Taking Stock. So thank you for joining me for this 49th edition on this Tuesday, April the 29th. And you knew I was going to say this next thing.
Uh-huh.
Yes, Art Jarvis, 100 days.
Yes.
So the first 100 days of
You
this Trump administration.
survived the first 100 days. It's been an interesting run up to this point, but I sincerely doubt that it won't continue to be interesting. So, yeah.
Well, I guess we touched on when we say survived, probably that applies more to Jerome Powell than me and you, and because a couple of weeks ago there was like these little hints flying out there, which Trump said not going to fire Jerome Powell.
Yeah, that was big. That was big.
That could have been
when he came out and said those words. That set the tone for pretty much the last couple of weeks. So.
Which brings us to and we, as always, before we open the microphones here in the, by the way, not soundproof Studio A. So listeners. You guess which day this... Oh, I already said the day. Well, you can guess what time it is and what the weather is by what you may hear in the background here in Studio A is not 100% soundproof. And in fact, there's a nice window for us to look out and watch the weather while we're taking stock. But so I'm winding all over the place, but we were talking offline a little bit. It set the tone, you said, for the last couple of weeks. Those very important words of I am not going to remove Jerome Powell. And so we are on, is this the 5th day or the 6th day of an uphill?
So, yeah, we have had 5 positive closes in a row. As we speak right now, the market's up about 0.75%. And so if we finish up today, that'll be 6 positive days in a row. Right. So, and I don't know the numbers exactly, but it might be something like 8 out of the last 10 or something like that also. Yeah. So it's since we spoke last time, things have changed substantially, at least from a performance standpoint. Right.
Well, and even and as you mentioned, and I really appreciate your bringing up when we were talking offline, and for the listeners, 3 weeks ago. Now the last Taking Stock episode was 2 weeks ago, but the 3 weeks ago one was the Friday. Hey Art, do you think we should do a special report? And you're like, by all means. And so that special report was something of a turning point that day too.
It really, that Friday, it turns out, we don't have, there's a crack in my crystal ball, is how I always put it. But you just was one of those days where in the morning it was just another ugly morning, and really, again, the clients are pretty good about not calling, but really my phone was kind of getting lit up a little bit that morning. And so when you called and said, what do you think? I was like, I've already had this conversation 6 times, so why not put it on, why not record it, So, but yeah, it was, that Friday was kind of the epitome of, we're getting into the ridiculousness category, right?
And the proof is in the pudding. So we did a special report, and it got a response just about 3 times normal for a regular Taking Stock episode in terms of listeners. So people jumped in and listened to that special report, wanted to know, and maybe it had the calming effect we were hoping to convey to the people. Like, the thing that we talked about right then, it was Friday. It's like, well, the good news is markets close Saturday.
Right, Saturday, everybody calm down.
Take a breath over the weekend and just let's have a 2-day recovery period and come back feeling a little bit better, safer, stronger on Monday. And it's gone. It has gone fairly well since then. But
it's interesting. There is actually a push to kind of go to 24-hour trading. And Art Jarvis is completely against that because I do believe in cooling off periods, right? I do. Sometimes you need to take a breath and really look at what's going on and not make decisions based on fear, but try and make some educated, fundamental, qualitative, quantitative, technical decisions, right? And if you're just sitting there watching the market drop 3.5% every day, 2%, it's hard to make a decision because if you're trying to make a decision and the market drops another 2% while you're trying to make a decision, you're not a happy camper, right? But no, you're right. If we look at the market since that Friday, just call it 3 weeks ago, we're up 14-15% from that day. Okay, and not only so things are looking a little bit better. There's been some positive commentary. I mean, you mentioned he came out and said, "I have no intention of firing Jerome Powell." Okay, well that made the markets feel way better, right? We've had some positive comments, some that don't agree with each other, but we've had some positive comments about the tariff negotiations and then some people seem to be at the table and other people say we're not at the table, but I still have to believe that there are some negotiations going on behind the closed doors. So there's been some positive commentary there. But honestly, from a psychological standpoint, I think we have just calmed down a little bit. And I hope and I feel that we're looking at these markets and looking at the things that are going on and looking at them with a little bit more calm eyes, I guess is the better way to put it, right? I mean, and I can't guarantee that someone's not going to come out tomorrow and say something and it's going to, rattle the markets again. Matter of fact, frankly, we might spend the next 3 years getting the markets rattled off and on. But
well, the naysayers. I mean, the tariffs. We have talked about tariffs all 100 days. It seems like, however many taking stock episodes have happened in Trump's first 100 days of this term, tariffs. Yep. And so the naysayers, I'll call them, because you make a great point. One, I have always believed we do not know, and we don't need to know, everything that's going on in the White House behind the scenes regarding, military, regarding economic, regarding any kinds of things. So negotiations, but here's the point. So negotiations are probably going on that we don't know about. Yeah. However, the media, that mainstream media we'll refer to, I hear this thing yesterday. Well, China's pushing back, and so the tariff war with China is ongoing, and the prices are going up, and all it is bad. All it is an attack against John Q. Public, and tough on us. Prices up at the supermarket, prices up at the gas pump, prices up everywhere because of Trump's tariffs and China pushing back. And so guess what? You're going to love this, and you may have heard it too. The R word.
Yeah.
Yesterday, I was pretty sure you heard it. I meant to ask you about it earlier, but I was like, "Are you kidding me?"
Yep. But here's what made me happy: the R word was mentioned, and yet we still went up. The market still went up yesterday. I was like, "Okay, that to me, I'm like, okay, that's a positive sign." Among a whole bunch of indicators, we start talking about recession again, and yet the market still goes up. So, we're kind of in that, okay, maybe we're actually paying attention to the numbers and not to the fear. So.
Well, one of the things that, and I don't want to say it scared me, but it brings that fear factor to people that are listening or watching these reports. So there was that, and the R word gets mentioned. And then there was the statement. like it's fact. Now, whether it is or not, I don't know. But they said people are financing their groceries.
Oh my goodness! Right? I saw that same article.
Did you see?
Yes. That's not a good.
Buy now, pay later in groceries. What groceries is Kroger's offering a buy now, pay later program?
I don't know. I don't do that. It's like, yeah, but it's a thing now. Like, it's not only groceries. It's almost every single. Like, if you go on Amazon and buy something, there's a buy now, pay over 3, 4, 5, 6 months, whatever, right? And they're doing it with this. Now they're talking about doing it with your gas and with your groceries and things. Guess what? That's not a good thing. I mean, that drives sales. That will make sales go up, right? But then you got to start worrying about the default risk. Okay,
right.
If I go to
2008 repeats itself.
If I go to the grocery store and I was going to buy hot dogs, but because I can finance it, I buy ribeyes or I buy New York strips, right? And guess what? I just spent way more at the grocery store than I was planning, and to make it worse, I got to pay it off over the next 3 or 4 months, right? And do I have the money 3 or 4 months to pay that off? From now to pay that off? I mean, it's no different than a credit card, right?
Right.
And I haven't looked at the interest rates, but I'm sure it's probably not far from that. Okay, so you know what? You've heard me say before that we as human beings have very short-term memories, and it's this kind of thing that got us in a whole lot of trouble back in 2008.
Right. Which is why a moment ago I said we're going to repeat 2008.
Yeah.
We do not need to repeat that.
No, that was no fun at all. And we and I actually had this conversation earlier today with somebody. It's 2008 could actually have been way worse than it was. I mean, the market dropped 55% between 2008 and the beginning of 2009, right? It could have been way worse if certain things had gone differently, especially if you're looking at the U.S. debt and things like that, and who owns our debt and things.
Right.
There's a couple countries that honestly, in my opinion, cut us a break. Right. Okay. And it's interesting to me that they were nice enough. I kind of say that a little sarcastically, but they were nice enough to cut us a break back in 2000.
I wasn't reading that until you admitted it. But
but this is why this is an audio show.
I was going to say, who were the countries that cut us a break? Because we want to applaud them and thank them.
We would. Let's see. But then you say, okay, let's throw maybe a China or a Japan in there. We're in the process of punching them in the nose right now, right? So,
there's a reason for that.
Yeah, well, I didn't say it. I didn't say it was wrong.
Right,
but it's like you kind of look back and it's like we do have short-term memories, and I think we need to acknowledge that. So I don't. I've said this before. I don't disagree with what's trying to be accomplished. I just kind of also feel there might be a kinder, gentler way of doing it. So but This administration has chosen to rip the Band-Aid off, and and do I think that long run will probably be better off, at least from an economic standpoint? More than likely. From a relationship standpoint, that remains to be seen. So.
Well, that we'll get. I'm going to come back to that. Remind me, say, Chuck, you were going to come back to something on that point, relationship specific.
Right.
I might have lost it already, but anyway. I did want to, we're taking stock. So let's take stock with some numbers and facts. Again, you and I have these conversations. One of those specific was the S&P 500. Right. So I have a question. So the S&P 500 dropped to, what was the
48.50, let's say. It was 48 something.
That was the low.
Yeah.
We'll say within these last 100 days, even though it was more recent than that.
Yeah, definitely.
Probably within the last 3 weeks.
Yeah.
Right before, things settled a little bit. But so the S&P 500, which had achieved a number of 6,200.
Yeah, 6,200,
by December.
Yeah.
Well, as we got into January.
I think it was February 19th, to be honest with you.
Okay, it wasn't.
Don't.
I couldn't remember if it
I won't bet the ranch on it.
I could not remember if it went past January or not, but 6,200.
Yep.
And a drop all the way to the most recent low of 4,800. But here's the point: taking stock. What's S&P 500 climbed back to, as of the last number you saw today.
Yeah, 5570, let's call it. So we're banging up against 5600. Yeah. So just rough math, we're still, call it down 10%. Yeah.
Well, and if it dropped, if it dropped 1,400 points, we'll say, forget percentage for a minute, it has already regained about 700 of those points.
You're precisely right.
In a fairly quick turnover.
Yeah, 3 weeks.
Yeah,
that's quick.
Right.
That's a racehorse.
I was going to say, that's a thoroughbred.
That's right, exactly.
Fast climb. The other question that goes with that, though, is because the curiosity that I think both of us had when it was at 6,200 is it gone too far too fast?
Sure.
I mean, that's an Art Jarvis mantra too. It's like, are we're going too far too fast, and we sort of have to correct. So with the quick climb back to 5,500, is it going to be in that 6,200 range? Is it maybe a little more slowly getting all the way back to there? And is that the right place? Or should it really come in a little bit lower than that, and some of those points lost, or was just a correction that was necessary?
Yeah, I think that's part of it, honestly.
Yeah.
If to make an educated guess, I thought 6,200 was too far too fast. Back in last year, I was calling for about 5,400, if I remember correctly.
Right.
And I think we finished 5,800 or something like that. And then next thing you know, we're at 6,200. Because after the election in November, the market took off. I mean, we made 3% one day after the election. So yeah, number one, yes, would not have, minus all the other drama, it would not have surprised me if we didn't pull back a little bit from 6,200 and calm our jets for a period of time, take a breather. But at the same time, then you throw a whole bunch of negative news on top of it. That momentum, which I'm a big believer in momentum, that momentum is starting to head down, and then you start throwing the fear factor into it. That's what carried us. And then you start getting all kinds of commentary. You got the press saying things and stuff like that. That fueled the fire, which drove us down into the 4,800s on the S&P. So coming back, do I think we're okay where we are? Yes, based on where interest rates are right now and corporate earnings. Corporate earnings still, in general, are showing up pretty good. Can we still get back to 6,200 in a relatively short period of time? I believe we can, but I also have to acknowledge the fact that we have a lot of people that are out there saying that when it gets back to this level, I'm getting out. Like, I hear this, and so it gets back to, like, 5,600 is a level that we broke through. Right. So when you get back up to 5,600, that old support level, again, this is looking at things from a technical standpoint, that old support level becomes a new resistance level. So we probably will have to take a little bit of time to work our way through 5,600, unless all of a sudden we get some major announcement that the tariffs are taken care of, right? Or we got some good announcement. If I remember correctly, my prediction for this year was it 7,000? I think for this year on the S&P.
That sounds right. Okay.
So is it possible that number might be somewhat lower at the moment in time? Sure, because it depending on how long the tariffs drag on. And yes, that might have a dampening effect on some things, but. I in no way, shape, or form am I seeing anything that still says we're heading into the recession and things like that. So,
well, these negotiations, you hinted, and I said I wanted to get back to it. Relationships, the long-term correction for our economy, for the strength of our nation through whatever these policies are. The hope is that at least over the long term, it will have a positive effect for. John Q. Public and, Carlos the consumer.
Carlos the consumer.
Carlos lives here too.
Yeah, well, Carlos is spending some money, so good for him. Yeah. I mean, that's the thing. You look at the consumer, you look at consumer confidence and consumer sentiment, most the sentiment and confidence numbers have taken a hit. Well, that makes sense. Everybody's running around scared, right? But it's funny, everybody's scared, but they still appear to be spending money. So,
well, and I always have that one question, and I don't want you to answer it right now, but you know what, that one question I always ask is like, well, are people buying on credit?
Yeah.
And then again, that becomes that fear of returning to 2008, because eventually you got to pay.
Yeah.
But getting back to the point of, here's Trump's administration, and they're playing the tariff war, trying to balance trade for the U.S. because it's been unbalanced against the U.S. for far too long.
Right.
And so, what's going to be the long-term effect or impact on relationships with all these other countries? Mm-hmm. And here's something that I found interesting from one of the analysts that I heard actually on somebody else's show. Yes, I listened to other shows.
What?
But I was not the host. It was not my guest. It was somebody else. But anyway, so this analyst was talking about, and it's interesting, if I recall correctly, he actually said Trump has realized that we don't have the superiority position worldwide, globally, as the U.S., that we had like during his last term, where he could say, basically, here's what we're going to do. And then they're not going to, the other countries, China specifically, is going to fall in line because it's the U.S. and we're the power. Mm-hmm. And so the analyst says, I think what has come in these recent weeks is Trump is seeing we actually aren't viewed globally as powerful as we were. Yeah. And so, and therefore when Trump was, showing that power or playing that power in his first term, it was different response, a more favorable response in his favor and in favor of the U.S. And he's seeing now, like, wait a minute, this pushback, and again, especially from China, they're like, they're calling him on it.
Yeah.
So how good is his poker face and saying, I don't care, we are still these powerful United States, and we're going to, you go ahead and fight us, and that's going to be at your expense.
Yeah, first of all, there's a lot to unpack there. Okay. Number one, I think we were a little overconfident. I do think that's true. I think maybe, and again, I'm not a politician. I have proved that I am not a politician, right? But I mean, I don't think you take into account the resolve of different cultures. Like, as Americans, we tend to spend, and we don't like it if the economy goes down and things like that. Maybe if you're in a different country, as a culture, maybe you're willing to suffer a little bit of pain to make your point. Okay, so I think it's a lot of that. I think that, I'll just use the Chinese example. I think as a culture, I think the Chinese have a different culture about things, and if you come at them head on like that, they're going to dig their heels in the sand a little bit, But at the same time, it's like, what's our resolve? How much pain are we willing to accept? Well, you mentioned, today's day 100. And if you just take it purely based on the markets, we're not willing to take much pain, right?
Right.
It scares us as an economy and as a culture and things like that. It's the fear factor went up substantially. So but I will still say that the almighty dollar, the almighty yen, the almighty euro, the almighty pound, the almighty whatever you want to call it. Still holds true, okay? And I think as humans, we still have very short-term memories, and whereas some things may not be forgotten, they may be more forgiven, just to make things put things back on course. So again, I'm not a master psychologist. I'm not a politician, but I just, that's, after doing this for a whole lot of years, it's just kind of, I have made a career out of people being consistent.
Right.
Okay, people are consistent. They will make the same mistakes or do the same things over and over and over again, and you can see that happen. I'm not saying it's 100% true, but it happens with enough frequency and enough probability that you can make some decisions based on it. And that's, we go back to 3 weeks ago. I mean, you just sit there and, when you're sitting there and I'm shaking my head at what's going on, you're like, and you get 2 or 3 standard deviations below what's normal. Guess what? So, if everybody's on the same side of the ship, I'm heading to the other side of the ship. I say that all the time, right?
Right.
If everybody believes this, or most people believe this, then they're probably wrong. So that's a long-winded answer, and I'm not even sure I answered your question completely. But I mean, that's kind of how I look at it.
Well, I'm not sure I asked you a question.
Oh, okay. Well, good.
I mean, if there was, it would be. So do you think that the impact on relationships and the effect on relationships has already shown itself with maybe the United States is a little bit, coming from a little bit of a weaker position than in the past? And then the answer is probably, and it depends. And you said it. It depends on the resolve of other nations, and that also relates to what their culture is, as you just said. We're going to wrap up.
Okay.
So final question, and you can be as long-winded as you want.
Okay.
Or as short as you want, but we're coming up. We got about 4 or 5 minutes left.
Okay.
This is going to be crazy for you. What are the questions that we investors should be asking you? The advisor, the investment advisor, the manager of our monies. What are the questions people should be asking? Your clients should be asking you, and other people should be asking their advisors right now. If they're, because there's been a lot of volatility. So what are the questions they should be asking, and what are the questions you kind of want to hear?
As opposed to the ones I don't want to hear.
Right.
And you know what? That's a great question, Chuck. I like that question, because the answer is, what are the opportunities today, or yesterday, or whatever? What are the opportunities today, and what are we doing in my portfolio to take advantage of those opportunities? That's the exact question people should be asking. Okay, I mean,
what are the opportunities today?
Yeah.
And if I'm talking to you, my financial advisor, I should be asked, what are the opportunities today, and what are you doing? What are we doing with my portfolio to take advantage of those opportunities?
100%, and I'll give you an example.
That's what I want.
So last year was all about technology. Okay, technology drove the vast amount of, not only technology, but a handful of companies in the technology sector drove the vast majority of returns in the S&P 500 last year. Okay, what we're seeing this year, especially here over the last few weeks, which makes me very happy, is those sectors that maybe have been neglected for the last 12 or 15 months are starting to come alive. So a lot of these securities that we have in the portfolios that maybe were underperforming, especially compared to the technology sector, have actually started to become the leaders, and the whole move up is much more broad based than what we were seeing in like 2024. So, number one, okay, if that's the fact, what neglected sectors, what neglected securities, what neglected markets are we looking for to take advantage of that, right? And that's great. I can say, hey, we should be in this sector or that sector. Then the next question should be, okay, that's great. What do we have in my portfolio to take advantage of that? And there better be an answer, right? If this is what you believe, if this is what you see is happening, what actions have you actually taken to get them in there? Now, honestly, that we have definitely taken it. When the market was down actually almost 20% at one point off the top, yeah, we made some moves. We took some new money and put it to work and things like that. And up to this point, it's been paying dividends for us. But at the same time, it's kind of lost my train of thought. But it's nice. The point was we had already last year been making moves in the portfolio to pull in these neglected sectors and neglected markets and things like that.
And I recall in previous episode discussion on that specifically. So,
and the nice thing is when the market did drop, the neglected sectors from 2024 didn't drop near as much. I mean, they dropped a lot, but they didn't drop near as much as especially the technology. The technology market just got pummeled. Right. So not only did they not drop as much, now they're actually coming back faster than the market. So, we didn't go down as much as the market. Now we're coming back, at least for the moment, we're coming back up faster than the market. That's exactly what I want the portfolios to do. If I get to the end of my career and I say we outperformed the market and did it with less volatility, guess what? I did exactly what I wanted to do.
Yeah.
So hopefully that answers that question.
No, that's a great answer. So the right question is, what are the opportunities, and what are we doing to best position ourselves to benefit from those opportunities? Because take advantage sounds kind of harsh, but that's the bottom line. We want to take advantage of opportunities.
Yeah.
So the door's open. Come on in.
Unfortunately, there's a give and a take in the market. There's a buy and a sell in the market.
Yes.
Well, guess what? In order for me to buy something, someone has to be selling. Right?
That's a fact.
So, I hate to call it taking advantage. I'll take advantage of the situation, but I guess in the end, there is a person on the other end making the opposite decision of what I'm making.
Yeah. So. Very good.
There you go. So a little more positive this week.
Yes.
Yeah.
I think so.
Yeah. I like positive.
Well, we still covered some critical, whatever controversial factors, but it was a positive outtake.
Yeah. Don't get me wrong. I didn't enjoy the last 100 days. Okay, we weren't throwing a party or anything like that, but there was a certain amount of confidence in things. So, and again, I'm not saying we're out of it, but I definitely feel way better about things than I felt 3 weeks ago. That's for sure. 5
consecutive days of an up market will tend to have that impact. Yeah.
It's a lot more fun. Let's put it that way. The conversations with clients are a lot more fun too. So,
this was another fun episode.
Yeah, I appreciate it. I've said this a couple times before. It's like this is a very good process for me. Because you ask good questions, in my opinion, and it's good for me to talk it out.
Yeah.
Out loud.
Well, I hope so. Yeah. Well, and I hope that for the listeners that it's a good process for them too, and they pick up some insights. And if they're not directly related to Jarvis Global Investments, whoever they are, they're going and saying, "Hey, what about this?"
Yeah.
And with maybe a little more knowledge and forethought to the questions they're asking their guy, and understanding of what should or should not be happening. So, but thank you again.
Yeah, thank you, Chuck. Appreciate you.
And so we'll be back in 2 weeks.
Episode 50.
Episode 50 is coming up. So that's it for today, Art Jarvis. We're going to call it a wrap on Taking Stock episode 49. So until next time, thank you once again for joining us.
Have a great day.
Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.